A presidential candidate's asset management firm merges with a failing social media marketing company, pivots to become a Bitcoin treasury, and the stock explodes 131% in pre-market trading. Strive Asset Management, co-founded by Vivek Ramaswamy, the Republican presidential candidate, is attempting to become the first publicly traded asset management company with a Bitcoin treasury. The new vision for the combined entity is not merely about passively holding Bitcoin. It is a dedicated, aggressive mission to maximize Bitcoin exposure per share, utilizing sophisticated and innovative financing mechanisms. They're using an exotic financial instrument called perpetual preferred shares, paying up to 20% annual dividends to buy Bitcoin, and they've already accumulated 7,525 of this cryptocurrency. But here's the catch. The company is bleeding cash, has never been profitable, and is paying a dividend rate so high that one analyst called it financial suicide if Bitcoin doesn't appreciate fast enough. Is this the future of asset management, or a financial house of cards waiting to collapse? This is the story of Strive Asset Management. Welcome back to the Capital Navigator, the channel where we explore the strategies, business models, and financial realities of the world's most influential or innovative companies. We'll cover Strive's origins and the bizarre reverse merger that created this entity, the hybrid business model combining anti-ESG asset management with aggressive Bitcoin accumulation, the alarming financials showing massive losses, the explosive stock volatility, and the enormous risks that could make or break this experiment. Let's dive in. The genesis, how it all began. The history of what is now known as Strive Inc. is defined by a single critical event, a dramatic reverse merger that occurred in 2025. This transaction was the mechanism that transformed a relatively small, publicly traded social media marketing firm, Asset Entities, into an ambitious asset management powerhouse, Strive Asset Management, with an aggressive singular focus on Bitcoin. The company's trajectory can be divided into three main phases: the founding of Asset Entities, the founding and growth of Strive Asset Management, and the merger and strategic pivot toward Bitcoin. Asset Entities Inc. was the publicly traded shell entity that served as the vehicle for the reverse merger. It began its operational life as a general partnership in August 2020. The company was, at its core, a technology firm that specialized in providing social media marketing services and content delivery solutions across a wide array of popular digital platforms, including Discord, TikTok, Instagram, X, and YouTube. Its business model was entirely rooted in the volatile but high-growth digital content creation ecosystem. Asset Entities Inc. achieved a significant corporate milestone by completing its IPO, beginning to trade on the Nasdaq on February 3, 2023. This IPO provided the liquidity and public listing status that would later be leveraged. It was a tiny, struggling company, but it had a Nasdaq listing, which made it valuable as a merger vehicle. Strive Asset Management was founded in 2022 by Vivek Ramaswamy and Anson Frericks. Strive immediately positioned itself as a highly differentiated asset manager, explicitly promoting an anti-ESG investment philosophy, which they eloquently termed unapologetic capitalism. Their strategic purpose was to fundamentally challenge the prevailing trend of environmental, social, and governance investing promoted by the industry's largest incumbents, often referred to as the Big Three asset managers. The execution of their vision was remarkably fast. In August 2022, the company launched its inaugural ETF, the Strive US Energy ETF. Driven by Ramaswamy's high media profile and his increasing political visibility, Strive achieved unprecedented scale for a startup asset manager. In less than a year from its launch, the firm managed to surpass the critical benchmark of $1 billion in assets under management. Ramaswamy formally stepped down from his CEO role in February 2023 to fully concentrate on his presidential campaign, passing the leadership baton to Matt Cole. The single most defining event in the company's brief history occurred in the middle of 2025, when the company officially announced a strategic pivot that would fundamentally change its identity and its financial fate. In May 2025, Strive Enterprises and Asset Entities announced a definitive merger agreement. The objective was for the combined entity to become the first public asset management company with a Bitcoin treasury. It was structured as a reverse merger, in which Strive Enterprises shareholders would receive approximately 94.2% of the combined entity. The merged entity was renamed Strive Inc., maintaining ticker ASST. Matt Cole became CEO and chairman of the board, while Arshia Sarkani, former CEO of Asset Entities, assumed the role of chief marketing officer. Strive adopted a Bitcoin treasury company strategy with the goal of maximizing Bitcoin exposure per share over the long term, using novel financial strategies. Simultaneously with the merger, the company executed a substantial $750 million private investment in public equity placement. The capital raised from this crucial transaction was earmarked specifically to finance the initial, large-scale accumulation of Bitcoin for the newly established corporate treasury. The business model: hybrid and unconventional. Strive's business model is hybrid and highly unconventional, having evolved drastically in 2025 from a technology and marketing company to a firm with a dual focus: asset management driven by contrarian ideology and leveraged corporate Bitcoin treasury. The current business structure is best understood through its two interconnected segments. Asset management segment. This segment is the traditional recurring revenue engine, generating income primarily through management fees charged on its total assets under management. Strive's value proposition in asset management is based on unconditional shareholder primacy and anti-ESG, anti-environmental, social, and governance investing. They strategically differentiate themselves through an aggressive proxy voting strategy. Their declared objective is to vote shares in a way that maximizes shareholder returns without succumbing to political or social agendas. This strategy is not theoretical. For example, in 2023, Strive gained notoriety by voting against a substantial 65% of the CEOs in the S&P 100 index. They offer a range of exchange-traded funds, mainly passive, in sectors like energy and broad market, with competitive fees, though slightly higher than sector giants. Bitcoin Corporate Treasury segment. This segment represents the clear, future-oriented value driver for Strive in the medium to long term, following the transformative 2025 merger. The central strategy: increase Bitcoin per share and outperform Bitcoin's long-term return. It positions the company in a niche but rapidly emerging market subsegment: the corporate Bitcoin treasury. This strategy, while specialized, has been famously pioneered by corporations like MicroStrategy, which began incorporating Bitcoin directly onto their corporate balance sheets as a primary reserve assets. They use raised capital to acquire Bitcoin. As of November 10, 2025, holdings totaled 7,525 Bitcoins. To finance these massive acquisitions without diluting the common equity, Strive utilizes capital with an extremely high cost of opportunity: the variable rate perpetual preferred stock. This instrument pays a substantial variable dividend, starting at an initial annual rate of 12%, but carrying the risk of increasing up to a maximum of 20%. Strive also actively seeks to outperform simple passive Bitcoin holding. This includes seeking discounted value in the crypto ecosystem, like the intention to acquire Bitcoin claims in bankruptcies, or acquiring external companies with positive cash flow to convert that capital into Bitcoin. The numbers. Pre-merger financials. The financial figures through mid-2025 correspond to the social media marketing operation from asset entities before the reverse merger with Strive in September 2025. Remember, the original ASST was a technology company providing social media marketing services, so these numbers aren't very representative of the strategic change or pivot the company made last year. Revenue has been highly volatile, recording $277,038 in 2023 and $633,489 in 2024. That's barely $500,000 in annual revenue. Tiny. Operating losses have exploded, passing from $645,255 in 2022 to $4.9 million in 2023 and $6.4 million in 2024. The former entity experienced a dramatic and financially unsustainable surge in operating losses in the years immediately preceding the merger. Operating cash flow has been consistently negative, indicating the company has been consuming capital to finance operations. The financial struggles continued right up to the finalization of the merger, with recent results for the 6 months ended June 30th, 2025 reaching revenue of $344,008 and an operating loss of $4.3 million. This stark and critical financial reality is the undeniable reason why the new Strive management is completely abandoning traditional valuation methods and aggressively pivoting to the high-stakes, high-growth, speculative sector of the Bitcoin treasury and leveraged crypto finance. The market values this company not for its fee income, which is very low compared to expenses, but for the value of its Bitcoin treasury. The company was trading with an implied premium of approximately 1.35 times over net asset value of its Bitcoin holdings, suggesting the market has high expectations about management's ability to generate alpha and increase Bitcoin per share. This strategic pivot was also reflected in the stock volatility for this company. After the IPO, stock performance suffered significant pressure. In September 2023, NASDAQ notified the company it wasn't complying with the minimum bid price requirement of $1 per share. However, stock behavior was radically altered by the reverse merger with Strive Asset Management and the new Bitcoin treasury strategy. News of the merger with Strive Asset Management and the new Bitcoin treasury strategy caused an explosive market reaction. ASST's price rose plus 131% pre-market to $1.41. The caution flags. The model, while strategically brilliant in concept, is inherently high risk, dominated by unique financial and operational pitfalls. Extremely high cost of capital. The number one financial risk is the massively leveraged capital structure used to fund the Bitcoin purchases. The preferred stock carries an extreme, non-negotiable dividend commitment, which starts at a whopping 12% per annum and can contractually increase up to a maximum of 20%. This high-cost capital must be serviced, without exception, regardless of Bitcoin's performance, creating a significant and persistent drag on cash flow. This represents a massive, non-discretionary cash flow drain that must be covered by a combination of the asset management fees and ultimately the unrealized gains on the BTC treasury. Bitcoin concentration and volatility. The entire valuation of the company is fundamentally linked to its active Bitcoin treasury, thus exposing it to the digital asset's inherent, severe, and unpredictable volatility. A prolonged Bitcoin drop, especially below their average acquisition price of $103,000, would drastically reduce treasury value. Bitcoin has experienced historical drops of 50% to 80%. A severe or prolonged crypto market crash would drastically affect Strive's asset value and market capitalization, potentially leading to financial difficulties or, in an extreme case, bankruptcy. Lack of scale and low operating profitability. The asset management segment is very small, with assets under management of just over $2 billion, meaning it has no significant cost advantages against giants. Dilution and concentrated control. The company is constantly capital consuming and is almost certainly going to require further equity or debt financing in the future, which could result in significant dilution for existing common shareholders. Also, the company's complex dual-class share structure, involving both Class A and Class B shares, concentrates the vast majority of voting control among the directors and founders. So here's the brutal truth about Strive Asset Management. This is one of the most unusual and risky financial experiments in the market right now. Anti-ESG asset management firm merges with a failing penny stock, pivots to become a Bitcoin treasury, and starts using exotic financial instruments paying up to 20% annual dividends to buy more Bitcoin. The bull case is interesting. They're a publicly traded asset management company with an active Bitcoin treasury, trading at a premium to MicroStrategy. The anti-ESG brand creates a loyal customer base. If Bitcoin continues appreciating and they execute their alpha strategies successfully, this could be a winner. But the bear case is terrifying. They're burning cash, have never been profitable, and are paying dividends at rates that require Bitcoin to appreciate dramatically just to break even. Is this innovative financial engineering or a disaster waiting to happen? Only time will tell. But the risks are absolutely enormous. So what do you think? Is Strive's Bitcoin treasury strategy brilliant or reckless? Would you invest in ASST at current levels? Drop your thoughts in the comments. I genuinely want to hear your take on this controversial company. And if you found this analysis valuable, smash that like button and subscribe to the Capital Navigator. We analyze high-risk, controversial companies like this every week. Thanks for watching. I'll see you in the next one.